Welcome to PreciousMetalsInvesting.com. My name is Ted Sudol, and I have the pleasure of having as my guest today Charlie Nedoss. Charlie is the Senior Market Strategist for LaSalle Futures Group. Welcome, Charlie.
Nice to be here, Ted.
And we were talking before we started this episode on the precious metals and what we're seeing in the markets.
I was going to say, Ted, I think, in the last podcast we had talked about a couple of issues that I think that we are seeing the dynamic of the gold market continue to focus on. First, physical demand. If you take a look at, physical supply and demand. On the demand side, we've seen coin sales at extremely elevated levels. We've seen them trading at levels really over the futures markets here now, or over cash markets. And on the supply side, just the problems with mining that we're seeing associated with having a workforce. We have seen some major disruption in mining in both gold and silver, specifically in silver. Mexico came out late last week and basically halted production for the month of April. And, Mexico being one of the world's largest silver producers, I think not only gold and silver in this type of situation will continue their upward trajectory.
And as you said, Mexico closed their mining operations. There are also some other countries that have closed their silver mining operations. So, as you said, the supply is going to be constrained quite a bit, and demand is up.
Yeah, and I mean, miners, refiners as well. I was reading an article where they were talking about Swiss refineries are coming back, and they are back on, but they're running at about 50% of capacity. So the other dynamic that we had talked about was the U.S. dollar. And the U.S. dollar spent a good portion of last week trading at par or even beyond par levels. On Friday, we did see the dollar come off, and we saw the dollar come off in a pretty big way, and we saw the both gold and silver markets really respond to it quite well, with gold putting in new highs for the move, challenging that 1750 mark and closing out the week for the June futures contract at about 1740. So the uptrend in gold has been steep. I wouldn't be surprised to see some type of a setback in the next week, but and that's in terms of interweek. But I'm still very, very friendly to the gold market, and I don't think that we've come near the highs of these moves.
I don't think so either. I think that we're really just beginning the long-term move upward. There will be a couple of setbacks and some volatility, but I think that a lot of the things are in play now that we've been talking about for a long time. One of those being inflation and the devaluation of the dollar.
I do, and I think the inflationary implications of it are starting to show up in food, and they're if you listen to a lot of the talking heads on TV, and this is just a debate that I've had for quite some time, in the sense that they'll say, well, that's excluding food and energy. Well, number one, food and energy are quite important in the average household. I don't know how many listeners out there can live without food and energy. Number one. Number two, in terms of my household budgeting, I think that if I have something that's a volatile cost that I don't know, that's something that I'm going to plan for, that I'm not going to exclude. And I don't think that the ostrich head in the sand approach is quite the way to go at it. But if you do listen to that argument and you say, fine, I'll give you that food and energy don't matter, at the same time then that you can't say that cheaper energy prices are like a tax break. So net, Again, I think energy prices are cheap, and energy prices are cheap for a reason, because we're seeing workers not go to work, thus not consuming energy. Well, if workers aren't going to work, that means that goods aren't being produced. If goods aren't being produced, and we've seen interest rates go to zero and possibly to negative levels, that's a lot of dollars that are floating around there. And that's why when I take a look at this move in both gold and silver, I think there's something behind it this time, in the sense that when we do come out of this, inflation will rear its head, and I think it will rear its head significantly. The dynamic that I did see that was interesting this week, Ted, other than these factors that we've been talking, that I think are going to be major issues or dynamics that the market's going to be looking at, is the fact that this week gold and silver seem to follow the stock market. In other words, days where the stock market exhibited strength, you saw gold exhibit strength, and especially on Friday, when we really kind of saw the perfect storm here, there was the dollar came off. There was a lot of consternation on what was going to happen in the OPEC meeting in terms of oil price cuts. Some people were projecting $30 oil again. Back month oil futures are trading above $30. They are trying to prop up that market.
Why do you think that the gold prices were following the stock market movements?
I think because I again, I'm going to tie that into inflation. And that's exactly the point that I'm making, is that I think that people in the stock market, I think that the stock market, the overall dynamic, again, is looking at the relationship with gold and saying that if the dollar is overvalued at this level, we see the dollar come off. Goods are generally worldwide denominated in dollars. So if you start to get to the situation where you have too many dollars chasing too few goods, again, that creates inflation. Right now, I think, quite frankly, the equity market, that's what that does kind of need to see. We do need to try and the market's in the attempt of trying to reflate itself back to, quite frankly, what I see overall as elevated levels of the stock market. In terms of why, that's because of yield. Look at where bonds are at. This has been a constant quest for yield.
Right.
But I also look at classic investing, and I start to look at PE ratios. And when there's no E in the P, that's when things start to get worried, and you start to say, well, maybe this market is overpriced. Again, I'm not a financial planner. I'm not a equity trader, but I've been around these markets long enough to know and to look and see the relationships of how the metals markets trade in relationship to big moves in the stock market and big sea changes in the stock market. And what I'm seeing now parallels very closely the situation that we saw back in the 2007, 2008 area. And again, the metals markets did quite well in that time period.
Yes, I see the parallels also. Charlie, it's really always impressed me how astute you are in analyzing the markets and the information that you can derive from the charts, since I think you said that your strength is in analyzing the technicals. Is that correct?
That is. I do use technicals. I like to know fundamentals of markets, but obviously, if you take a look at your equity statement, it is based on price. So I think that there are repeated movements that markets make, and there is a lot to forecasting markets based on different technical chart patterns. And when I look at both gold and silver now, I see some very, very big levels being breached, and I don't see big resistance levels above these markets where we sit right now.
Charlie, if someone wanted to get in touch with you to talk about these issues further and perhaps become your client, what would be the best way to reach you?
They can reach me via email at cnedoss, us at LaSalle Futures Group. That's C as in Charlie, N as in Nancy, E as in Edward, D as in David, O as in Oscar, SS as in Silver, two S's, at LaSalleFuturesGroup.com. I can be reached on the phone at 312-818-1895.
Okay, would you want to speak a little bit about your strengths and your experience in the market, and also talk a little bit about LaSalle Futures Group and what they do?
Sure. I've been in the futures markets, well, for almost longer than I'd like to admit, Ted. I've been in the market for about 30 years now. I've worn many hats in the futures industry. I've both worked often on the trading floor, working with institutional clients, both speculative and hedge type trading. Most recently, I'm working with individual investors, and I work doing anything from speculative trading to hedging in terms of working with farmers, producers, end users in the agricultural as well as the energy industries. The firm that I'm with, the introducing broker, is LaSalle Futures Group. LaSalle is what I would call a boutique brokerage firm. And in that, I mean, we service traders anywhere from somebody that's trading online that's just looking for a good, clean place to execution, up to, again, as I mentioned, anybody with any type of hedging needs in the futures market, as well as individual investors. Working with individual investors, generally, a lot of the work that I do is options and options on futures, and specifically limited risk trading strategies. If anybody is out there that would like to discuss the opportunities in futures or options on futures, I'd love to talk with you in terms of markets. If anybody had any questions regarding strategies or markets, or had any questions, I'd be glad to help them. Feel free to shoot me an email or give me a call.
Well, thank you for being with us today on PreciousMetalsInvesting.com. I'd urge all of the listeners to this Precious Metals Investing podcast to listen to us if they're a Android user on Google Play. It's available for Apple users on iTunes, and it's also now an Alexa skill. So if you use Alexa, simply put it into your flash briefing, and when you call up Alexa, it will read you the latest from PreciousMetalsInvesting.com. Once again, Charlie, thank you very much for being with us today.
Thanks for having me, Ted. I always enjoy being part of the forum on precious metals investing.